Welcome back to Bonnie's Life, where we decode the crypto universe one chart at a time. I'm your host, Bonnie, and if you've been living under a rock this week, let me be the first to tell you Bitcoin just did something absolutely extraordinary. We're talking about a historic week that saw Bitcoin smash through the $113,000 barrier for the first time in human history. And frankly, if you blinked, you might have missed one of the most significant moments in cryptocurrency's evolution. Now, before we dive into the technical wizardry and fundamental forces that drove this rally, let me ask you something. How many of you predicted that we'd see Bitcoin trading above $115,000 in July 2025? If you did, congratulations. You're either a time traveler or you've been paying very close attention to the macro environment. For everyone else, don't worry, because today we're going to dissect exactly what happened, why it happened, and most importantly, what it means for your portfolio moving forward. This isn't just another price pump, folks. This is a confluence of technical breakouts, fundamental shifts, and global economic forces that have created what I like to call a perfect storm for digital assets. We're going to explore the Federal Reserve's dovish pivot, the institutional buying frenzy, the upcoming crypto week in Washington, and why altcoins are suddenly showing signs of life after months of Bitcoin dominance. Let's start with the numbers that matter. As I'm recording this, Bitcoin is trading at $115,371, representing a staggering 3.7% gain in just the last 24 hours. But here's where it gets interesting. This isn't just a one-day wonder. We're looking at a 7.7% surge over the past 5 trading days, a 10.11% monthly gain, and an absolutely mind-blowing 38.12% quarterly performance. To put this in perspective, while the S&P 500 has been celebrating its own record highs, Bitcoin has been quietly outperforming virtually every traditional asset class. The total cryptocurrency market capitalization now stands at $3.36 trillion, which, while still 13% below the December 2024 peak of $3.86 trillion, represents a remarkable recovery from the lows we saw earlier this year. Now, here's something fascinating that most analysts are missing. Bitcoin's dominance currently sits at 63.94%, but, and this is crucial, it's actually declined by 0.18% recently. This might seem insignificant, but in the crypto world, when Bitcoin dominance starts to wane while prices are rising, it often signals the beginning of what we call altcoin season. More on that later. The broader market context is equally compelling. We're witnessing Nvidia become the first company in history to reach a $4 trillion market cap, the Nasdaq and S&P 500 hitting fresh records, and gold trading at $3,336. All indicators of a robust risk-on environment that's providing tailwinds for crypto assets. Now let's get into the technical meat and potatoes, because this is where things get really exciting. From a pure chart perspective, Bitcoin has just completed what technical analysts call a textbook breakout from a consolidation pattern that had been forming since the previous all-time high. Using Fibonacci analysis, and yes, I know some of you think Fibonacci levels are just fancy lines that traders draw to feel smart, but bear with me. We can see some remarkable confluences. The recent swing low at $106,000 and the current high at $116,794 give us a clear framework for understanding where Bitcoin might be headed next. The Fibonacci extension levels are particularly telling. The 127% extension sits at $119,708. The 138% extension at $120,896. And the 161.8% extension at $120,896. $123,465. These aren't just random numbers. They represent psychological and mathematical levels where institutional, algorithms, and professional traders are likely to take profits or add to positions. From a support perspective, we now have a beautiful staircase of levels. The former all-time high at $111,000 has transformed from resistance to support, a classic technical development that suggests the breakout is legitimate. Below that, we have additional support at $110,530 and $108,509, with the critical level to watch being $106,000. If Bitcoin can hold above this level, the technical picture remains overwhelmingly bullish. The momentum indicators are equally compelling. Our calculated RSI equivalent sits at 56.8, which is in that sweet spot. Not overbought, but showing clear bullish momentum. The 7-day volatility has actually decreased to 1.52%, suggesting that this move higher is more controlled and sustainable than the violent swings we often see in crypto markets. But technical analysis only tells half the story. The fundamental drivers behind this rally are perhaps even more significant than the chart patterns. Let's start with the elephant in the room, the Federal Reserve and monetary policy. The catalyst for this week's surge can be traced to a single social media post. When former President Trump suggested that the Federal Reserve's interest rates are 300 basis points too high, Bitcoin jumped within 30 minutes. Now you might be thinking, Bonnie, why does a political figure's opinion on monetary policy matter so much for crypto? The answer lies in understanding how digital assets function as macro trades. Historically, Bitcoin and other cryptocurrencies have shown an inverse correlation with interest rates. When rates are high, traditional fixed income investments become more attractive, pulling capital away from risk assets like crypto. Conversely, when rates fall or are expected to fall, investors seek higher yielding alternatives, and crypto often benefits from this capital rotation. The Federal Open Market Committee is scheduled to meet on July 29th to 30th, and the recent meeting minutes suggest a dovish stance. Multiple Fed officials have indicated support for at least 2 rate cuts in 2025, despite concerns about tariff-related inflation. Goldman Sachs has adjusted their forecast and now expects the first cut to come sooner than previously anticipated. The institutional narrative is equally compelling. Between January and May 2025, publicly traded companies borrowed $2.1 billion specifically to purchase Bitcoin for their treasury reserves. This isn't speculative trading. This is strategic allocation by sophisticated institutional investors who view Bitcoin as a legitimate store of value and hedge against monetary debasement. The global regulatory landscape has been shifting dramatically, and these changes are having profound impacts on crypto markets. Let's examine the key developments that have shaped this week's price action. First, we have the upcoming Crypto Week in Washington, which represents a significant shift in how U.S. policymakers are approaching digital assets. This isn't just another conference, it's a coordinated effort by House Republicans to advance comprehensive cryptocurrency legislation, including the long-awaited stablecoin framework. The stablecoin legislation is particularly important because it provides regulatory clarity for what has become a $150 billion market segment. When regulators provide clear rules of the road, institutional capital tends to follow. And we're seeing early signs of this dynamic playing out in real time. Internationally, central banks are accelerating their digital currency initiatives. The Reserve Bank of Australia just launched a 6-month trial for digital money applications. Pakistan's central bank is preparing a digital currency pilot, and multiple other jurisdictions are advancing their CBDC programs. While some view CBDCs as competition for cryptocurrencies, the reality is that they're legitimizing the concept of digital money and creating infrastructure that ultimately benefits the entire ecosystem. On the platform development front, Robinhood's announcement that US customers can now stake Ethereum and Solana for as little as $1 represents a significant democratization of crypto yield opportunities. This type of mainstream adoption by major financial platforms is exactly the kind of development that drives long-term value creation in the space. Now, let's talk about something that has me genuinely excited. The altcoin market is showing signs of life. For months, we've been in a Bitcoin-dominated environment where alternative cryptocurrencies struggle to gain traction. But this week, we're seeing a different dynamic emerge. Ethereum, the king of altcoins, surged 6.2% to reach $2,700, outperforming Bitcoin and testing levels we haven't seen in over a month. This isn't just random price movement. Ethereum's performance is being driven by several fundamental factors, including increased institutional interest in Ethereum ETFs and growing adoption of the Ethereum ecosystem for real-world applications. XRP has been equally impressive, gaining 4.49% and reaching 2-month highs. The recent legal clarity around XRP's regulatory status has removed a significant overhang, and we're seeing renewed institutional interest in what remains one of the most technically advanced blockchain networks for cross-border payments. Even Dogecoin, often dismissed as a meme coin, surged 6.24% following news that Donald Trump Jr. S media company is considering adding it as a treasury asset. While this might seem like a publicity stunt, it actually represents a broader trend of mainstream entities taking cryptocurrencies seriously as legitimate financial instruments. The technical picture for altcoins is equally compelling. Bitcoin dominance has declined from 65.26% to 65.08%, and multiple technical indicators suggest we could be entering the early stages of an altcoin season. When Bitcoin dominance breaks down while the overall market is rising, it typically signals that capital is rotating from Bitcoin into alternative cryptocurrencies. All right, let's get practical. You didn't come here just for the analysis. You want to know what this means for your trading strategy over the next 24 to 48 hours. Based on our comprehensive technical and fundamental analysis, here's what the data is telling us. For Bitcoin, we're looking at a strong bullish trend with multiple entry opportunities. Conservative traders should consider entries on any pullback to the 111,000 to 113,000 range, which represents the former resistance turn support zone. More aggressive traders might consider adding to positions on any dip below $115,000, given the strong momentum profile. Our target levels are $118,000 for the first take profit, $120,000 for the second, and $125,000 for the extended target. These levels are based on Fibonacci extensions, volume profile analysis, and historical resistance zones. The risk-reward ratio at current levels is approximately 2.5 to 1, which represents an attractive setup for position traders. Risk management is crucial in this environment. A stop loss below $108,500 would invalidate the bullish thesis and suggest a deeper correction might be underway. This represents approximately a 6% downside risk from current levels, which is reasonable given Bitcoin's historical volatility profile. For altcoin traders, the declining Bitcoin dominance suggests a rotation strategy might be appropriate. Ethereum, with its strong fundamental backdrop and technical breakout, appears well positioned for continued outperformance. XRP's regulatory clarity and technical setup also make it an attractive candidate for the altcoin rotation trade. From a portfolio perspective, the current environment suggests a balanced approach. A 60% Bitcoin, 30% major altcoins, and 10% speculative positions allocation would capture the broad market uptrend while maintaining exposure to potential altcoin outperformance. Now, I wouldn't be doing my job if I didn't address the potential risks and warning signs that could derail this bullish narrative. While the technical and the fundamental picture is overwhelmingly positive, there are several factors that prudent investors should monitor closely. The regulatory environment, while improving, remains fluid. The upcoming crypto week in Washington could produce unexpected developments, and any negative regulatory surprises could trigger significant volatility. Additionally, the Federal Reserve's actual policy decisions might not align with market expectations, potentially causing a reversal in risk asset sentiment. From a macro perspective, inflation data, employment figures, and geopolitical developments all have the potential to impact crypto markets. The correlation between crypto and traditional risk assets has increased significantly, meaning that any broad market sell-off could affect digital assets disproportionately. Technically, while the current setup is bullish, a failure to hold above the $111,000 support level would be concerning. Additionally, if Bitcoin dominance suddenly reverses and starts climbing rapidly, it could signal that the altcoin rotation trade is premature. Looking beyond the immediate trading opportunities, the long-term outlook for cryptocurrencies continues to improve. The institutional adoption trend that began in 2020 with companies like MicroStrategy and Tesla is accelerating, with more corporations viewing Bitcoin as a legitimate treasury asset. The $2.1 billion in corporate Bitcoin purchases during the first half of 2025 represents just the beginning of what could be a multi-year trend. As more CFOs and treasury departments become comfortable with Bitcoin's risk-return profile, we could see a significant increase in corporate adoption. The success of Bitcoin and Ethereum ETFs has also created new pathways for institutional capital to enter the crypto market. These regulated investment vehicles remove many of the operational and custody concerns that previously prevented institutional participation. Globally, cryptocurrency adoption continues to accelerate. With over 55 million US participants and a $3.4 trillion global market cap, crypto has moved from a niche technology experiment to a legitimate asset class that demands serious consideration from any diversified investment portfolio. As we wrap up today's analysis, it's clear that we're witnessing a pivotal moment in cryptocurrency's evolution. The combination of technical breakouts, improving fundamentals, and supportive macro conditions has created an environment where digital assets can thrive. For the week ahead, keep your eyes on the $111,000 support level for Bitcoin, the Federal Reserve's communication around the July meeting, and any developments from Crypto Week in Washington. The altcoin rotation trade also bears watching, particularly Ethereum's ability to hold above $2,700 and XRP's momentum above its recent breakout levels. Remember, successful crypto investing requires patience, discipline, and continuous learning. The market will always present opportunities for those who are prepared and educated. If you found today's analysis valuable, make sure to subscribe to Bonnie's Life, hit that notification bell, and share this episode with anyone who needs to understand what's really happening in the crypto markets. I want to hear from you in the comments. What's your take on Bitcoin's breakout? Are you positioning for an altcoin season? What questions do you have about the current market environment? Your engagement helps me create better content and ensures that we're covering the topics that matter most to you. And next week, we'll be diving deep into the Ethereum ecosystem, analyzing the impact of the upcoming network upgrades and exploring some of the most promising DeFi protocols that are driving real innovation in the space. We'll also be covering the results of Crypto Week in Washington and what any new legislation might mean for the broader market. Until then, stay informed, stay disciplined, and remember, in crypto, knowledge is your most valuable asset. This is Bonnie, signing off from Bonnie's Life. Trade safe, and I'll see you next week.